Now, Mauritius can be described as a post-resources economy in Africa, having diversified its economy away from being sugar-based to new drivers of growth that include financial services, offshore finance, banking and tourism. Over two-thirds of its economy is now service-driven. Joining us now for more is James Benoit. He's CEO of AfrAsia Bank. James, thanks for your time. Thanks again for coming through Johannesburg. You're finding it really easy to come back into Africa more often.
All the time.
Is it opportunities? Is it deals?
Yeah.
What are you coming to see?
Yeah, it is deals. We're looking at a few other acquisitions in the region, doing a lot of networking with clients and basically raising capital, helping clients raise capital to expand across the continent. So I'm getting back here every other month now.
Is it busy for you?
It's busy. Yeah, I've had to hire more team to do that, so I can't do it all myself. So we're ramping up the team.
Yeah.
And they're traveling into Kenya, Tanzania, Mozambique, doing that work as well. So it's good.
You're not mentioning West Africa?
For Mauritius, we're being strategic. We're focusing on COMESA, SADC, Eastern Africa. We'll get there at some stage, but
yeah.
I think there's more natural links on this side of the continent.
What are you looking for? What are you looking at?
Banks, corporate finance, asset management. And there's huge demand for sovereign debt, huge demand for the yield that Africa has, trade finance. So a lot of corporate lending, private banking, helping clients do business in Africa.
Let's talk about the trade finance. What exactly are you finding? Where is the demand?
Well, there's a lot of commodity shipments still going out to China, a lot of other Indian demand as well. So, quite active in shipping, obviously, all the commodities which Africa produces. So still quite strong, even though it's been subdued a bit from the Far East lately.
Now, in terms of that foray into Africa, what are you doing? Are you coming in and setting up shop? We know we set up in Zimbabwe. It was a partnership with Kingdom Bank. What's the strategy there? Is it acquiring? Is it partnering with locals? What is it?
It's partnering. It's partnering.
It is partnering.
Depending on what their want is as well. Some people do want to exit if it's a family-owned bank, or they may want to exit in time. So we're looking at having operating capabilities, balance sheet capabilities in strategic countries. So for the corporates coming into the region, that they're able to have a full range of banking solutions on the ground in those markets. Yeah.
Talk to us about Zimbabwe, because that was an interesting time that you went in there, because things were not as settled as they are now, well, in relative terms in Zimbabwe. Certainly then it was far perhaps more riskier than it is now. How have you found, has been the experience?
It's still fragile. There's still challenges sometimes with liquidity, but we seem to see that it's getting more stable in terms of outlook. The investor perception that I'm finding in London, in Europe, coming through Mauritius is all good. Everyone's expecting things to normalize, stabilize there, and so the actual outside world is going through a re-rating perception, I think.
And in terms of the business environment, in terms of actual business coming through the bank?
Yes, we're seeing big demand from Indian corporates doing projects in Zimbabwe, and they're using Mauritius as a structuring vehicle.
What kind of projects are they looking for?
They're looking at commodities, refineries, factories, same coming out of China as well, obviously. So it's wide-ranging, China and India.
Yeah, I joke with my friends. The last time I was there, I remember driving up to Harare, and I remember joking with a friend of mine that actually Zimbabwean cars were overtaking me. Now, of course, that precedes the years when there was no fuel there, and everybody was driving at 30, 40 kilometers an hour. But in addition to that, just looking at the level of volumes of traffic on the roads, including trucks and that kind of thing, you generally get that sense that this economy is ramping up.
You get that impression that it's busier, busier than people think when you get there, and you see quite smart restaurants and shops going up, shopping centers. So, it's moving. Definitely, you can feel that.
Yeah. Let's talk about the position of Mauritius as a conduit, if you like, for funds that are looking at Africa. Just how does that work? Explain for us.
Well, obviously, Mauritius has many investor protection agreements. It's got tax treaties, but it's also a very stable regime, and it has access to lots of foreign currency. So in terms of providing an overall, capital solution combined with advisory, and we use Mauritius in conjunction with our operations here in South Africa. So we can help people do a lot of things across the continent. So Mauritius is just it's a good capital haven, a good place to do logistics and financing for projects across the continent.
Are you sitting with a lot of money from the East that's looking to find its way into Africa? How much money?
It's increasing. We're still only 50% lent out of our foreign currency deposits. We do have a lot of funds coming in from Europe, from Asia, and they are making those investments steadily into East Africa.
And if you were to compare Europe, Asia, and maybe break down Asia between India and China, what does the picture look like?
China is still much bigger, but we can see the Indian component looking at it much more now. SR Group is making major investments in Zimbabwe. That's no state secret. I can mention that. So India, I think, has been a bit lagging, and obviously their economy has had its own slumps. But we are seeing Indian corporates, whether it's cement and other commodities, now doing things in Africa.
Yeah. What about Mauritius itself as a business, as a place to do business? How is that economy? I mean, we know. I mean, I was reading those numbers about the fact that this economy is now 2/3 services.
It is. I think you have to look at Mauritius as a place to do business from. It's only 1.3 million people. So to come there as an end market in its own right is perhaps a bit crowded. But if you are incubating and using that as a regional platform, and it's a very effective, very efficient, very pleasant business environment to do regional trade.
Yeah, but in terms of the business environment, sorry, in terms of the business actually taking place inside Mauritius itself and prospects for that economy on its own, how does that look?
It's subdued right now mainly because we're still orienting our tourist market away from Europe into Asia, and also just generally trade flows have subdued around the world. So it's a bit subdued. But as the African trade continues to pick up, that creates an infrastructure spin-off and people, settling in Mauritius spin-off. So in another year, I think the economy will be back at a pretty good recovery. But even then, it's still going to grow at 3 or 4% this year.
Let me bring you to your presence in Africa. I mean, so we spoke about Zimbabwe. What about on the eastern side? Because we've seen quite a few discoveries of natural resources and that kind of thing. What role are you playing there?
We are doing a lot of trade finance and project finance in Mozambique, Tanzania, Kenya. We are looking to set up operations in 1 or 2 or 3 of those countries in the next 12 months. So we want to have some balance sheet and banking capabilities on the ground in a variety of those countries.
I'm hoping when that happens, you'll come right here and you'll tell us about it.
My pleasure.
James Benoit, CEO of AfrAsia Bank, thanks very much indeed for joining us and giving us that update. Now remember, you can email us on powerlunch@abn360.com. After the break, we'll discuss the government's plan for economic zones here in South Africa. There will be more right after the break.